All right, just like the title says, I think we are setting up this week for potentially a pretty ominous turn. It could be a bull trap. Why do I say that? Because we have broken out above the bearish ascending wedge, which I've been showing you guys for quite a while. Now, the last time I brought it to your guys' attention, I showed you that we had a bullish descending parallel channel, and I actually drew out a little arrow path that we were going to move up to 550, which we did. Now the market is remaining in a bullish trend. The bulls are charging, but I've talked with you guys about the perfect trifecta of a bullish market, which is price, volume, and momentum. And I've showed it to you guys repeatedly. We're going up on price, but we are down 66% on today's up move, breakout of that wedge, the supposed bullish moment where price is just climbing and climbing. Well, the volume on today's move was down 66%. And if you go into the momentum indicator, the RSI, Relative Strength Index, it shows that we've actually had bearish divergence on the weekly chart for the last couple months. But again, we're building a new level of bearish divergence on the daily RSI chart. Now, what does the market have going for it? Well, it's got the price move up today. If you go to the stochastic, which is also an acceleration metrics, it's actually pointing up, which means that we can still have a few more moments of pop. Now, I alerted in the Stocks with Josh Discord just last week that I was finally looking at the sqqq. I've been asked for the last couple years, is it time to buy the sqqq? Now, having said that, it's not time to load your bags, but it's definitely time to start watching the sqqq chart. Now, if you don't know what that is, it's an inverse ETF that goes up when the markets go down. With all the metrics I just laid out, the market is not moving up with the trifecta of strength that it needs. It's actually moving up on low, weak volume. And so that's going to turn out to be a bull trap for some people that really don't have their eye on the chart. Now, in addition to that, we've got a lot going on from data perspective this week. 3 major events. The first lineup is on Tuesday and Wednesday when Fed Powell is going to come out and answer questions by the House and the Senate and crash the market, or just speak to the House and Senate about what's going on with the market. That's going to happen at 10 a.m. Eastern Standard Time, and he's going to talk 2 days in a row, this Tuesday and this Wednesday, and at any given point during those conversations, we know that he can move the market. And then on the heels of that, if that wasn't enough, we've got the CPI coming out this week. That's the Consumer Price Index. That's coming out Thursday at 8:30 a.m. Eastern Standard Time, and there is the expectation that it's going to drop from 3.4% to 3.1%, which would be a huge pat on the back for Jerome Powell and the success that he's had to bring inflation down. That's if it isn't a miss. There's a huge move expectation right now for that inflation to come down, and so we're going to have to watch it very carefully on Thursday morning. And then we've got the PPI. That's the Producer Price Index. The expectation there is for a 3.4% read. They're expecting a flat read. That's going to be Thursday at 8:30 a.m. for the CPI and Friday at 8:30 a.m. for the PPI. And then that pretty full week leads us into some very interesting earnings, which are actually some of the banks. JP Morgan, Wells Fargo, BlackRock, and Citigroup are all reporting earnings on Friday. Now, here's the concern there, because they're an indicator all to themselves, because they're in the business of lending money or not lending money, getting deposits or losing deposits. And the fact is, if the banks are healthy and the banks are profitable and the banks are growing, it means that the rest of us are doing pretty good. But alternatively, if they're not, it's a pretty good indication that the economy is going to suffer and the banks could potentially crash on Friday if they've got bad earnings. And I'm going to be showing you one that I'm watching to potentially short. We'll know more as we get closer to the end of this week. This is the Stocks with Josh show. Thank you for joining me today. Thank you for hitting the like. Thank you for dropping a heart in the comments. Hit that like and subscribe to get my technical analysis on the market, the Magnificent Seven, hot stocks, small cap and big cap, and crypto. I'm laying it out every single day. I'm going to go over really quick a couple stocks. Some of them I gave trade alerts on or ETA updates in the Stocks with Josh Discord. If you don't know what the Stocks with Josh Discord is, it's a community of learning and pro traders focused on education. And tomorrow I'm going to do my first live stream to the VIP members on a trade setup that I use all the time, as well as dropping my first education video in the Discord tomorrow. Guys, I want to warn you real quick not to fall for scammers. I will never, ever, ever ask you to send me money or crypto here on YouTube or anywhere, especially in the Discord. If you see someone whose name is Stocks with Josh and my picture, and they reach out to you personally and ask you to become their friend and then turn around and say, hey, send me some money, there's an investment opportunity that I'm offering you, it is not me. Those are scammers. Hold on to your hard-earned money. All I'm giving away here is technical analysis and trade setups in these videos and in the Discord. I'm never going to ask you for money. All right, today I gave technicals on the sqqq, PayPal, NVIDIA, Tesla, and tsls. I'm going to go over a couple of those with you guys right now. Okay, the first chart I want to take a minute and go over is AMD. Guys, we're in an overall uptrend. We have a beautiful supporting line. However, we have to be concerned about the fact that we do have an ascending parallel channel, and those typically break to the downside. That's why I've got a little bear above the $183 price. I'm expecting that we're very close to making a local top on AMD, and the way that we would know that is, one, the 183 is a trend line area of resistance, and then we want to see what type of candle we get at that level. Now, if we get a candle that pushes through 183 and closes above it, and then the following day we get a candle that opens and closes above 183, well, then 183 has not turned out to be bearish. It's turned out to be a support level, and we could go higher. However, if we get a line that comes up against these two areas of intersecting resistance, both the channel and the price of 183, well, that's where that bear becomes relevant, and we're looking for rejection. Now, where could we reject back to? Well, on a longer time frame, we could reject all the way back to this ascending line of support, which puts us pretty low as $127. And so if you're in AMD, you would be considering putting a stop loss right beneath 183 if you were interested in taking profits or locking them in, because we've had a bigger move up. Now, I just want to remind you guys of these ascending and descending channels. You see how they work. Here was an example of a descending channel. It broke to the upside, but now we have an example of an ascending channel, and it could break to the downside. So a little warning there on AMD. Now we're talking about tsls. Now this is an inverse ETF to Tesla, and you can see that it's come down quite a bit in recent days as Tesla has absolutely skyrocketed, right? But now we're getting to a place where it's becoming potentially a product that some might use to hedge their Tesla position. And you might say, well, why use this, Josh? Why not just buy some puts? Well, I alerted that in the Discord that the puts, the IV, the implied volatility on Tesla puts, were simply too expensive. It was up at around 66%, whereas the historic price for puts for Tesla is right around 48%. And so what that could mean is if you attempt to load up on puts because Tesla begins to pull back and the price does come back, but it doesn't come back quickly, it means that the premium, the cost of those puts, could go down and not up. And so now's the time to look at other vehicles of hedging your Tesla position. Now, just to be clear, Tesla's still strong. I'm actually expecting an up move in Tesla, but we've moved up quite a bit, and I'm preparing for the potential hedge of my long-term shares. That's one way to potentially lock in profit. When you've made a ton of money on the shares, you want to basically protect yourself from the downside risk, and tsls is one of those ways. Now, I alerted today when it was at $15.90. It dipped slightly to $15.80, and then it went up to around $16.40. It was a quick swing trade, made a little bit of money, but now I'm going to be watching tomorrow for Tesla to make another push higher. And if it fails to climb higher, I do have a target of around $264. If we fail to meet that over the next couple of weeks, or something that Jerome Powell says puts selling pressure on the market, I'm going to be turning to that tsls inverse ETF on Tesla to hedge some of the profits that I've made with my shares climbing so fast. Okay, let's look at a couple other charts. All right, guys, I alerted to a potential swing trade on PayPal. Their earnings are Tuesday, July 30th. Not too far, and similar to my SQ commentary the other day on Block, I am also looking at PayPal. If you've followed this stock, you know that it's been absolutely slaughtered. Let's just quickly go to the monthly view so you can appreciate how much this thing has come back in the last couple of years. I mean, PayPal's been taken out to the woodshed and just gotten an absolute beating. Now, I'm not telling you guys that it's bullish. I do see it forming a little bit of support, and I am going to be watching for a potential breakout using a very tight stop loss with the potential of a move up to around $66. If we get this break above the descending line I just drew for you guys, then I think we'd have a pretty powerful potential move up on PayPal. Just want to remind you guys where we're at with the SPY. We're up against the top of the channel, and I don't believe that even though we could push out and actually hit our 560, I think we'll end up getting some red candles which move us to the other side of the channel. And what I'm definitely expecting at this point with the SPY is the fact that we're going to see price chop it up in this area before giving us the next direction. So what that would look like for the sqqq trade would be an accumulation somewhere between 720 and 620 on the low end for a potential move back to $10 to $12 on the high end. And I just want to remind you guys of the disciplines that we use to make these types of decisions in looking at stocks or ETFs or inverse ETFs like this. One, we want to make sure that we're trading with the trend. At the moment, the trend is still up, but it's up against resistance. And so for us to have a confirmation of our trade, and we do want a confirmation of the trade, we want to see it get rejected there. So right now, our principal position that we're taking is to closely watch and monitor these, because a nice position in the sqqq could go up 100% pretty easily. And so it could be an attractive trade. Don't outbull the bull. Wait for confirmation. Second, we want to use a stop loss. There's time to put a stop loss in on the trade and wait till it finally gives us a bottom or a reversal. Three, you can control your risk by controlling your position size. And of course, if you get it wrong, don't try to revenge trade. Take a step back and see if you're reading the charts correctly. Guys, that's going to wrap it up for me today. I'm going to see you guys live in the Discord tomorrow, the Stocks with Josh Discord, as well as the Stock Squad Patreon. I'm going to be in there dropping some trade alerts and some new charts as well. Appreciate you guys. Again, hit the like and the subscribe. Talk to you soon. Peace and blessings. Take care.